Good morning, I'm Lauren Hayes for the Finance News Network and happy Friday. US equities finished lower in Thursday trading, with the S&P 500 bouncing off its lowest morning levels, but trading in a narrow range through the afternoon before fading into the close. Yields spiked as traders digested the latest rate decision, putting pressure on equities. The yield on the 2-year Treasury note hit its highest level since July 2007, while the benchmark 10-year Treasury yield popped 8 basis points to 4.14%. Investor attention will also turn to October non-farm payrolls, set to be released tonight. A good jobs number and a low unemployment rate, while good for the economy, could signal more work ahead for the Fed. Another clue into inflation and the economy will also come from next week's October Consumer Price Index report. The Dow Jones Industrial Average fell almost 0.5%, the S&P 500 dropped 1.1%, and the Nasdaq slid 1.7%. Elsewhere, corporate earnings season continued, with Qualcomm, Roku and Fortinet all falling on disappointing quarterly results and forward guidance. Kellogg shares fell nearly 9% despite a strong quarter and lift to guidance. Companies from a wide range of industries continued to highlight a pickup in macro uncertainty, FX headwinds, with Europe and China the key areas of concern. Also, another batch of high-profile corporate hiring freeze and layoff announcements overnight complicated the labour market narrative. Chinese health authorities also pushed back against recent speculation it may be preparing for some kind of pivot on zero COVID, a policy which has been a major global growth headwind. While Canada ordered 3 Chinese companies on Wednesday to divest their investments in Canadian critical minerals, citing national security. For the week, all the major averages are on pace for losses, with the Dow down more than 2%. The S&P and Nasdaq have shed 3.9% and 5.8% respectively week to date. Across the sectors, energy was the standout, despite a fall in the oil price. Strong results, higher dividends and share buybacks has led the sector to shine in 2022. The suggestion of a windfall tax from the Biden government has already met heavy resistance from big oil and Congress. This year, energy stocks occupy the top 10 gainers in the S&P 500, with the sector becoming a defensive safe haven for investors. On the currency front, one Australian dollar is weaker compared to the US dollar yesterday, buying 62.94 US cents. Now to commodities. Iron ore futures are pointing to a 1.3% gain. Gold dropped over 1%. Silver fell 0.4%. Copper lost 1.3%. And oil dropped 2.3%. The SPI futures are pointing to a 0.4% fall. I'm Lauren Hayes. Have a great weekend.